But first to our top story. Xiaomi's debut was a day to forget, falling as much as 6% on its first day of trading in Hong Kong as an escalating trade war and uncertainty about its valuation dampened the exchange's biggest offering in 2 years. The weak opening in the midst of a China-US trade war may deter Chinese tech companies seeking to raise capital this year, but it was still a highly anticipated IPO. Take a listen to what's been said on Bloomberg Television so far.
We are actually a new species. We are an internet company that can do e-commerce and hardware well at the same time. I don't think there's anything like us in the market before.
But ultimately, it's what can you do with the device? And that's a software question. That's a software story. And so I think pushing away from kind of a hardware background into a more diverse offering, I think that makes a lot of sense. And I think I commend them for doing it. I think that's strategically a good move.
And even after that, I think we still, we will hold longer because we believe the upside for this company is much higher than the current, the status.
Tencent, Alibaba, Facebook, all the great ones, when they first IPO, each time convinced the investors that it is a huge special. Xiaomi is in that category of companies.
Keep in mind, services, you've really got to be very local specific when you develop services. And I'm not sure it's necessarily that easy to just copy and paste, if you will, and put it into another country.
Joining us now to discuss, Ben Harburg, a managing partner, MSA Capital, a Beijing-based venture fund, along with Bloomberg's Mark Gurman, who covers consumer technology. Mark, what does Xiaomi still have to prove?
Well, they have a lot to prove right now. They are very localized to China and some of the more developing markets like India. They are doing very well in both India and in China, but that's just one portion of the world. There's obviously the whole trade war tension right now, and the ability for Chinese hardware makers to get their devices in the U.S. and Europe is becoming an increasingly difficult problem.
Shelly, Banjo also joining us now from New York, our tech reporter who's normally based in Hong Kong. Shelly, how much of a disappointment is this?
I think it's a big disappointment just because of how much expectations were built up. I think if Xiaomi would have come to the market and, as they were, it was a big accomplishment for what they've been able to do. 8 years in existence and becoming, one of the world's biggest smartphone companies. They didn't just rest at that. Instead of saying, this is who we are and this is what we make, they said, we're actually this $100 billion company that, is an internet services business. And so that's kind of where this mismatch lies.
Ben, I just want to point out, Lei Jun, the founder of Xiaomi, is an investor in your fund. Would you be a buyer of Xiaomi today?
I am. I think it's...
At twice the price of Apple.
I am. I think it's a business that's really been underestimated and misunderstood. I think it's a company that's delivered a product, hardware that is actually a delivery device for multiple services. And in order to be a $100 billion company, I think they have to really disrupt and destroy an entire business. In this case, it's IoT. What they've done is they've made it democratized, and they put devices in the hands of everyone, not just in China, but in multiple emerging markets. And that gives them a platform then to deliver services at a very high margin.
Mark, you cover Apple. Is this worth twice as much as Apple?
Is it worth twice as much as Apple? If you look at unit sales that Apple is selling at, it's unprecedented. But if you go back to what Ben was saying in terms of delivering the services across hundreds of millions of devices across the world, that's where the lucrative markets are. We see Apple and Google and Amazon all shifting towards a services strategy. The problem is that Xiaomi, obviously a China-based company, has so much competition in the services world. We have Tencent and everyone else trying to get a piece of the pie there. WeChat, it's a whole different world in terms of services there. And Xiaomi is not ahead of the pack in terms of that.
And you heard the company make the argument earlier that they're an entirely different new species. Are they really an entirely different new species?
There's nothing really new there. No.
Ben?
I think they are. Again, in the IoT space, what they're doing is you had all of these disparate makers, people like Fitbit, others. They've essentially wiped all of them out by making a product that they can sell for a tenth of the price, still at profit, but then they can integrate it into this platform. So it's really only early days in the services platform. They'll provide things like healthcare, insurance, finance, all kinds of other apps that they can plug you into once they've got you. It's really unprecedented for us as Americans, but when you buy a Xiaomi television, for instance, you're forced to watch advertisements on it. So once they're in your home, which they will be because the products are superior quality, but at half the price, you have to take their services. It's a delivery device.
Shelly, how much of this result is about being caught up in a trade war?
I think that's the line you're going to hear from a lot of people that, this was kind of bad timing. And they're not wrong. This isn't great timing for the markets. If you look at China and Hong Kong in general, Both markets are down, and there's a lot of jitters about the trade war. But the thing is, Xiaomi's not even in the U.S. right now, so their business isn't actually going to be affected by anything having to do with the trade war. And so Xiaomi specific probably won't be that impacted by trade war, at least in the near future.
Mark, you've done a ton of reporting on the devices coming out later this year, including new iPhones. What is the hardware lineup that Xiaomi is going to be up against from Apple and others?
Yeah, and speaking of that, I still think there's an opportunity for a player, whether they're US-based or China-based, to come in with a very high-end premium phone at a sub-$500 price point. We've seen other Chinese phone makers do that. We've seen companies like OnePlus do that. Apple, to your question, is working on a cheaper iPhone as well, but no one has really nailed it. No one has had that combination, to Ben's point, of something that's good and cheap that people are going to buy in high volume. So Xiaomi had that opportunity, and right now in this political climate with this administration, it doesn't seem plausible that Huawei is having this problem as well. ZTE is going to be able to have that success in the U.S.
Ben, given the showing here, you're an investor in several other Chinese tech companies, Meituan, for example, another company that's planning to go public soon. Do you think this could lead some of those companies to change plans?
I don't think so. Again, I think it's tough timing. I think they were the first out the gate with a dual share structure. They had the CDR hiccup at the beginning. I think it's just a difficult position for them. Meituan, obviously a very different business, one that I think global investors understand a lot more easily because it replicates a lot of existing models under one platform. You can kind of show how all those integrate. Much more understandable than this new species, as Lei Jun describes it. We would call an Indominus Rex, something that's a combination of multiple business models under one roof. Really difficult to understand.
Shelly, Xiaomi also has the mainland China half of its listing to come. How is that going to work, and could the company recover?
That's something that remains to be seen with what's going to happen with the CDR. I mean, they really tried to push for it. They want to be part of it, but there's big disconnects between what the government wants, what regulators want, and what companies want. And so it's going to take at least 6 months for Xiaomi and the regulators to work through this. Could take a year, or it could never happen. I mean, it's still this new thing that no one has really been able to figure out. And Xiaomi was supposed to be the test case, and that didn't happen. So we'll see what happens if other tech companies, maybe more established companies like Alibaba, come forward first, and that might lay the way, pave the way for a company like Xiaomi to come after that.
The speculation, Mark, about Xiaomi's entrance or attempt to enter into the U.S. market with phones has been going on for years. Do you think Xiaomi could be the one to offer that lower priced, high-end handset? I mean, what are the chances that they would be the one?
It could and should be them, but the problem is this political climate is really not going to allow it. There's been this big emergence of the U.S. not wanting Chinese-based technology companies putting their devices for sale in the U.S.
ZTE, case in point.
Right, all their equipment, and et cetera, et cetera. So it's going to be difficult right now. It'll be seen if that's going to be difficult for the next 4 years, 7 years, or even longer, depending on what the next administration is, or if this administration changes their stance on these Chinese companies.
All right, Mark Gurman at Bloomberg Tech, as well as Shelly Banjo and Ben Harburg of MSA Capital. Thank you all.